Hello, everyone. This is Brian Hoops from Midwest Market Solutions. This is our Market Insider TV. It's our closing commentary, and it's also our WASD Supply and Demand Report webinar. We are August 12th. It's Thursday. Markets have all closed, and we're looking at kind of a wild session for this corn market, especially not much change for soybeans, but bullish, in my interpretation, for the wheat market. Let's take a look here at what we have to tell you. We want to mention that you can follow us on Twitter at Midwest Markets. That's our home account. Our website is MidwestMarketSolutions.com. Several of our brokers have Twitter accounts to follow. My personal one is Brian Hoops. Howard Cottle has a good Twitter account, a lot of information. Jerry Welch is always tweeting out good information. And Northern Ag, one of our branch offices in Minnesota, also has a Twitter account, a lot of good, not only market information, but insurance information. So follow us on Twitter. Sign up for our text message service. We send out text messages as well if you prefer to get messages directly on your phone. And let's take a look at the WASD webinar that inspired our markets and moved things today. So there's our disclaimer talking about risk of loss in futures and options trading. We've been around almost 20 years. 9 licensed brokers. Our business is growing as I started single office and have grown to offices in Missouri and Iowa, South Dakota, Nebraska, Minnesota, North Dakota, and Montana. We clear our trades through R.J. O'Brien, the oldest clearing firm on the CME. We have tons of services available, lots of newsletters, trading platforms, trading systems, Twitter feeds, text service, as well as full and discount brokerage service and hedge programs. Take a look here. Production-wise, this was a surprise for corn, 174.6. Now, the USDA has been very conservative all year long in making adjustments on exports, making adjustments on South American production. So we get to today's report, and they haven't made any adjustments yet. But boy, they certainly did. Almost a 5 bushel an acre drop from September to from the July to the August report. And you remember from last year, starting in August to the final, yields dropped 9 bushels per acre. So maybe the USDA is trying to get a little jump on what potentially could be further reductions in yield. But this was certainly a bullish number. Caught the trade off guard as we were looking for 176.9. I'll go to my estimates here in a minute, but I didn't think the USDA would come down to this area. This is where I'm at for yield. I just didn't think the USDA was going to get there this quickly. I thought they'd take a little bit more time in doing so. So this is a bullish surprise as far as yield goes. Production well below trade guesses, and strangely, this yield number is still higher than last year. And as I said, last year really started to come down about this time, starting in August into the end of the year. We ended up with 172 final. Soybeans, not much of a surprise, but a 50 bushel yield, down 0.8 of a bushel, a little bit less than trade guess. And production pretty close to the average trade guess, certainly down from last month. So all that is positive. We're still looking at producing bigger crops, corn and soybeans, compared to a year ago. As we increased acres. So keep that in mind in marketing. This year we are going to produce a little bit lower yields, but it looks like production-wise we could be similar or even possibly a little bit larger. This is a look at U.S. wheat production. I found this very interesting. Let's go to the category Other Spring Wheat, 343 million bushels, unchanged from last month. You remember back in July, that was the first number that the USDA threw at the trade. And wow, that was a shock to the trade, sent spring wheat sharply higher. However, this month they did not change it, and that was very much a surprise to the trade. And you can see spring wheat rallied today, but did not keep up with the winter wheat contracts. And you look at the all winter wheat, a big drop below trade guesses and from last month. Trade was expecting no changes in here. There was a little bit of winter wheat harvest that was ongoing yet from the last month, and so the USDA lowered this, and this was a kind of a shock to the trade. And we saw big gains, over 30-cent gains in winter wheat contracts, contract highs, in fact, in a lot of the December, the old, I shouldn't say old crop, but old crop contracts. All wheat production down from last month as well, below trade guesses. This was a friendly surprise. This is the lowest winter wheat production numbers in 19 years. So very friendly. And I've been talking about this for some time, that millers are buying the winter wheat to blend with the spring wheat. And we're also going to see, I think, an uptick in demand as we saw world ending stocks drop. So when we export wheat, it's winter wheat. It's hard red, it's soft red winter wheat. These are the ones that are exported. And you can see production down from, especially the hard wheat, down from last month below trade guesses. And the spring wheat is giving up its leadership role, in my opinion. And I've been saying that for quite some time. As far as our grain ending stocks, we're looking at old crop stocks here. Increased just a little bit. We'll go into that in more detail here in a second, but old crop stocks increased in corn and increased in soybeans compared to last month. But you look at the new crop, that's what the trade's focused on. Soybeans unchanged, wheat down quite a bit, almost 40 million bushels, while corn almost 200 million bushels less than last month. So bullish here in wheat, bullish in corn. This is a bullish number, but it wasn't a change from anything, and that's why soybeans pulled back at the end of the day. World crop production numbers, USDA, I said, has been very conservative with especially Brazil's corn number. They did drop at 6 million tons from last month. That's a bullish number. This is going to lead to increased U.S. exports, in my opinion. Argentina numbers pretty much right in line with expectations and month ago. So no major changes except this Brazilian corn number. Let's look at world ending stocks, and this again, look at wheat. This is bullish here. You got the wheat column, 279.1 million metric tons, well below trade guesses, well down from last month from the USDA, well below last year. This is bullish for wheat. And you look at corn, a little bit less than last month. That's friendly compared to the average trade guess. That's friendly. And soybeans actually increased. So if you're looking at bull markets, soybeans at one time were, but they've given up the leadership role definitely to wheat and to a lesser extent to corn. And let's take a look, commodity by commodity. Corn here, we won't spend a lot of time on this, but we decreased production by 415 million bushels. USDA said feed and usage would drop by 100 million. That does make sense, as we will see much tighter, much smaller livestock supplies, particularly cattle, going into the third and fourth quarters of this year. They also said exports would drop 100 million. This is one I really question. They said this because the prices move up, but with Brazil's production problems, I think there's a strong case to be made that U.S. exports are going to improve. Now, old crop exports, they certainly were justified in bringing that down 75 million bushels. No, I totally agree with that. I think that's warranted, and we're going to fall short of this export pace. Probably a lot of this sales are going to be rolled from old crop to new crop coming up here, but this number I think is going to be too low. But even with this change of exports, we're still looking at very tight 1.242 billion bushels of ending stocks. And so look at a historical perspective. Our numbers are on the right. My comparative numbers, I'm right in line with what the USDA said. I said 175 going into the report. It came in at 174.6. So production almost the same in here. 14.7 and some change. I don't disagree with really any of their demand numbers except that exports. I think we're going to end up closer to 2.5, and so I have ending stocks even tighter than what the USDA does. I'm closer to 1.129. I think this year is one that you probably can store a lot of the crop. If you're going into harvest, I would go ahead and become a seller. Selling crop out of the field, especially $5 corn, makes a lot of sense. I don't think there's a tremendous amount of downside risk here, but same token, putting some crop in the bin, letting basis narrow, I think makes a lot of sense for this year. Let's look at soybeans. USDA did some minor changes. Production, only 66 million bushels less. It's not a huge number here when you talk about yield, almost down 0.8 of a bushel. And next week's forecast looks fairly wet, so beans get decent rain. We could see this soybean crop around this 50 bushel yield number. Let me go back to corn just 1 second here. To put this in perspective, the USDA is at 174.6. That's the same as we had in 2016, and would tie for the third largest in history. 176 in 17 and 18. These were our largest yield numbers in history. This would be the third largest if the USDA is accurate in our history. Let's move ahead to soybeans in here. I was very close. I was at 50.2 going into the report. They came in at 50 bushels even. Production numbers are nearly identical. In demand, I think crush is maybe still a little bit overstated. Exports, I think, is pretty accurate. So ending stocks numbers, I think, are very much in line. I'm actually a little bit larger because I have a little bit more per yield numbers than what they do. So 150, they're at 150, 155. I'm at 169. I don't think there's a significant change there. The soybean crop is probably fairly valued at this level. Now, wheat is where it gets a little bit interesting in here. Overall yields are down 1.3 bushels per acre, so that gives us a 50 million bushel drop in production. What they did with exports is they left them unchanged at 875 million, but they dropped feed usage by 10 million, and so our ending stocks dropped by 38 million. So that's how they accounted for everything. And let's look at these wheat numbers here. I'm at a 44.1. I think they have room to come down a little bit yet, and acres that are harvested, I think, are going to be interesting. I have them just a little bit less than what the USDA is using. I think we could actually end up getting closer to this 36.7. There's going to be a lot more abandonment in the Minneapolis spring wheat belt than what the USDA is factoring in. So I think my number might be a little high. I think the USDA number is a little high, and there is some room to tighten this production number up accordingly. I don't have a lot of disagreements with their numbers, except for exports. I think could be 900 million bushels this year. There's enough problems in Russia, enough problems in Canada, Black Sea region, that we may have an opportunity to export a little bit more wheat than what the trade has been expecting. So I think your ending stocks tighten up a little bit. You go back here in 16, 17, 18, your ending stocks were stocks to use ratio over 50%. And it's really come down, and it could almost be cut in half if we're right, by cutting ending stocks down to 586 million and stocks to use ratio under 30. So this is it's not tight, but it is tightening compared to where we have been. And you see our ending stocks carry out over 1 billion for quite some time. Now we're almost cutting that in half as we plant less wheat, produce less wheat. I think that will probably change this next year. A lot of clients in the Southern Plains are talking about increasing their wheat acres, increasing their hedge for these wheat acres as fertilizer prices have moved sharply higher. A couple strategies to talk with you about. Forward sell what you cannot store for harvest delivery. That makes a lot of sense to me. Is sell some high-priced corn, soybeans right off the combine. Then let's store and manage the risk through the use of options and hedging strategies. And then also plan to store that unsold inventory. We'll look for basis to narrow as the market transitions to a demand market, which I think has some potential, especially for corn and for wheat, from a supply market. Hope you enjoyed this, and I hope this is helpful to you. Feel free to give any of our offices a call. I know they'd love to talk with you. Brian Hoops for Midwest Markets. I'll be on RFD TV tomorrow morning, and This Week in Agribusiness this weekend. Have a good evening. Talk to you soon.